Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 2nd. Yeah, I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the overall markets with my market analysis. And I do the same thing in these market commentaries, but I go a little bit further for you guys and talk about these different option strategies that I'm implementing into my portfolio. Well, in the webinars that I do on Thursdays, I go into the details of these different option strategies and talk about some guidelines set out for you guys to streamline your process in implementing a strategy around your given assumption. So what we talk about are things like the days to expiration, the strike location you need in order to be successful, to increase your probabilities of success, and the volatility in and around that underlying. All of that tells us what option strategy we need to be thinking about to implement around that assumption. So it's not just going out and picking a favorite option strategy. I don't have a favorite option strategy. What I have is some guidelines set forth for you guys that we follow along in order to find the right strategy, the optimal strategy for that given assumption. All right, so without further ado, let's talk about the economic data and see how that's impacting the overall markets here in the United States. Remember, Friday is Unemployment Friday. That's where we get the first Friday of the month. We release the non-farm payroll, so that's going to be a pretty important data point to look for. That's usually the one most people look at for the health of the economy going forward. So that's going to be a pretty important day. Right now, we do have ADP, which is non-farm payroll change, coming in at 427,000. That is less than the expected 1,250,000. So that's not looking great for the non-farm payroll, but that's the really important one. ADP has a tendency to be a little bit off. Productivity coming in at 9.8%, expected to be 6.5%. So that was, Canada's productivity rate. Factory orders here in the United States coming in better than expected at 6.4%, expected to be 6%. Also, they revised last month's number up slightly from 6.2 to 6.4%. Finally, we got crude oil inventories coming in at a drawdown of 9.4 million barrels. That's supposed to be a great number, and it was because it was expected to be a drawdown of 2 million barrels. Much more of a drawdown than what was expected. Well, looking over here at crude oil right now, we're seeing that we got a little bit of a red candle going on and crude oil down $1 on the day. Why is that? Well, that drawdown is by lack of supply. Demand has remained constant, but what we've seen is a lack of supply coming into the reserves because of the hurricane. So that we are heading into hurricane season here. So that is a lack of supply, lack of inventory coming into the system. They're still refining because that is on shore for the most part. Some places did obviously close down for the hurricanes, but most of it had to do with the offshore drilling and the lack of supply coming in from those drilling things. Also, today we get Beige Book later on this afternoon. Forgot about that one. That's an important number because it's released 2 weeks ahead of the FOMC meeting, which determines the interest rates. Well, they get something called the Blue Book, and that's why the Beige Book really, when you look at it or hear about it, it's really not a headline number because it's going to be a little bit dated by the time the FOMC meets. But it is a good insight as to what the FOMC is going to see. So I think it's a very important number to, or important data point to look for. And then we have Mester speaking earlier today. He's probably still speaking, or they're probably still speaking right now. All right, so let's talk about the overall markets. We've talked about crude oil coming off by $1. Wasn't due to a demand spike here. It was more due to the lack of supply coming into the market. But with factory orders starting to ramp up here in the United States, we could start seeing a little bit more demand coming out of this. We've been seeing some good manufacturing numbers, and that should be a little bit more bullish for crude oil going forward. Gold coming off quite a bit today after testing 2,000 again yesterday. I just couldn't sustain that move. I was expecting us to move up into that 2,000 with some stimulus packages coming around the corner, but that is not the case as of right now. We still haven't heard anything, and we're seeing some weakness come out of gold futures. We're also in the equities, which I'm getting a little ahead of myself, seeing some sector rotation, at least earlier today. The bonds moving higher by about 24 ticks, just shy of a full point there. Right back into the area where I've talked about where the most time and volume has been spent. Some of this has to do with the Fed governors talking and saying they do not see interest rates rising anytime soon. Well, if interest rates aren't going to rise, then the bond sell-off is a little overdone. That's why we're starting to see this this move to the upside. It started with the Jackson Hole Symposium, and now again, all of these Fed governors having their talking window start to narrow down, because the closer we get to that FOMC, there's a time where they're not allowed to talk about policy anymore. Well, they're all getting it out right now, and they're, for the most part, pretty consistent with the fact that they don't see interest rates rising anytime soon. Therefore, bonds start moving up, because remember, if bonds go up, that means interest rates are going down. It's like the teeter-totter we talk about, okay? So bonds are going up, which means interest rates are going down to kind of follow suit with what these guys are talking about there. Okay, sorry. Moving on. VIX is getting a little bit, well, actually it just went into negative territory since I started. It was a little bit higher as we were seeing a mixed bag here in the equities. Yes, the Dow Jones moving higher by 260 points, but we can see that Dow Jones has been, we will see actually as we go through these charts, Dow Jones, E-mini S&Ps have been the real lagger in this rally that we've seen in this parabolic move with the NASDAQ. Now, earlier today, we were seeing some of the FANGs and especially some of the big flyers, Apple, Tesla that we've been talking about. Some of those guys that have been really making these huge moves on the stock split, we're seeing some weakness today. As a matter of fact, Tesla was down over 70 points. And now, that normally wouldn't be a big deal when it was trading around 2,000. That's just not a major percentage of it. But remember, we had a 5-for-1 split in there. It rallied up close to 500, which made that equivalent to what we were used to seeing, 2,500, right? And now we're starting to see a pullback here. A lot of people talking around the horn that Tesla, yes, it is a tech stock. Yes, they have this autonomous. Yes, Elon did land a ship on the space station, and all of that tech is very important, but they're still not selling cars, all right? 300,000 a year, and that's basically what any other automaker does in a month, okay? So, you know, that means these earnings are projected out past 2040 now, 2040 year, okay? So 20 years from now, which is just way ahead of itself. So, you know, I've been talking about this for a long time, way ahead of the game, I think, and I've been talking about a sector rotation. Is that about to happen where we start to see this NASDAQ slow down and the rest of the broader equities start to catch up as people start moving this sector rotation into cyclicals, into transports, into the small tech, okay? That is kind of where I'm at. Maybe even biotech could be in there, where they're starting to get out of these tech sectors like the Zooms, like the Teslas, like Apple, that have done very well recently, and start rotating into some of these other guys that have been lagging a little bit, and more of the bellwether, maybe blue chips in the Dow Jones, stuff like that. So we could start seeing some of that happen here. You know, transports, we're talking FedEx, UPS, Landstar, which is, you've probably seen those on the shipping containers, stuff like that. Old Dominion, those are some of the transport names. Yes, those guys are still making all-time highs, but if we're talking about the stay-at-home economy, or people just not really wanting to go and touch a doorknob or walk into a Walmart or any of those things. We talked about Walmart yesterday starting to compete with Amazon on the delivery and stuff, and having their own what's the word I'm looking for there? I can't think of it right now, but trying to keep talking here and it's not helping, but their own club, I mean, Sam's Club was the club, but basically their own subscription is what I was looking for, kind of like Prime. All right. So Dow Jones up nicely today. NASDAQ finally moving into positive territory. It was down, almost doing an engulfing. I thought we were going to get back down at least into this value area or this trend channel. It's still a little bit overdone to the upside. I do expect, even with this type of doji where it's kind of settling in the middle, even a settlement at the top of that range is still going to look like it's a little bit toppy here with the NASDAQ. And I think that we are going to start seeing this more of a tepid rally rather than a parabolic kind of move here in that sector. Even the S&Ps on the highs of the day, they were seeing a little bit of weakness, as will show up in the overnight trade here. We started seeing some weakness coming into the day, but we saw those factory orders come out, and that was really a catalyst to the move to the upside. Also with the FOMC members talking and saying, hey, interest rates aren't going anywhere. Well, that is almost an open door policy to go out and buy equities, right? And that was another boost to equities. It even kind of pulled the NASDAQ out of the negative levels we were seeing there. So market starting to make some moves on these FOMC members talking, and pretty bullishly as well. Now, if we see some stimulus coming down the pipe, then obviously we're going to see that tech sector even take off as well. All right. Yes, Baba. This was a trade I took off yesterday. You can look at it today and say, geez, I probably should have kept it on, but it was done with a technical setup, right? And I stuck with that. You know, this is why we say in my webinars, when we are doing something, write it down. Our exit strategy, we need to write down. Well, I did. I broke that technical pattern where I had the doji where it kind of looks like this, and then we get a red doji that looked like this. Well, to me, that is looking to start to roll over. That's what we've got right here on this setup, right? Well, yesterday, the blast off to the upside. I said I was going to be out above this level. I'll just throw this on there, basically saying I would get it out if it broke above, not a very straight line, that level. And of course, that's when we got that green candle blasting off to the upside there in Tesla. So everything's, all the colors just kind of bleeding together. All right, so we got that green candle just kind of blasting us off to the upside, and decided to pull the ripcord on it when it broke that trade setup. And if you guys remember, I went into this trade with Baba and had on the September, sold the 300 calls, bought the 310 calls, followed my rules that I did in the webinar last Thursday on short calls, right? We had high implied volatility. The volatility actually was pretty high and started coming out. So that was working in my favor despite the fact that the market really wasn't going anywhere. And the market making that move higher yesterday on this level here. When we started making that move, we can see that volatility was starting to come down ticking there. Well, that helped me out despite the fact that the market was moving against me. And in those I sold it, like I said, 300 calls, bought the 310 calls for a $3 credit, and I dumped out of those for $3.70 because it broke that pattern. Now, tomorrow, I'm going to be doing a webinar on short calls. Well, I like the short calls better, the naked short calls, despite the fact that everybody says that those are higher risk and you shouldn't be doing those. Well, they are a little bit higher risk in that there's unlimited, but when we stick to being stick to our rules and follow our exit strategies, all right, well, the probabilities of a short call, naked short call going into the money is half that of a short call spread, all right? So the probabilities are further in your favor. So if the probabilities of it happening are better for you, what is that higher risk when I've got a 16% probability of the short calls going in the money or a 36% probability of a short call spread going into the money? All right, you tell me. Seems like the less risk trade, despite the fact that, yes, it is unlimited risk in a sense, is the probabilities, and that's usually what I look at. All right, so seeing that bit of a pullback here in BABA, I might re-enter this trade with a short call spread or a short call for that webinar tomorrow because we've got that volatility expansion. I want to take advantage of volatility coming out on that type of sell-off there. So BABA, I did cover for a loss there, and the other trade that I was looking at that I took off was Uber. Yes, I took off the Uber trade because it was basically just running against me, and I decided it was time to pull the ripcord on that as well. So let's go over to the Uber chart. Let me move this out of the way so you can see that it's Uber. Now Uber started blasting off to the upside. I was just worried about the whole upside in some of these markets. They started breaking. Yeah, I was kind of looking for it to go above that line there that you can see, but before I got out, or at least test that value area. But the market was really rallying yesterday. We were hearing these Fed governors saying it was going to be easy money for a very long time. Well, that insinuates that the markets are going to have a bullish move. So I decided to cut out of this trade. If you guys remember with this Uber, I had tried to lower some of my cost basis on it, but that being said, I did get short the stock in here because I had sold those 29 calls in there for basically California saying that they had to have all employees, these drivers that were contractors would be employees now. So I was able to lower some of my overall cost basis on this trade. I sold the 29 puts. I collected 74 cents in that, and had the stock. After I had the stock put to me, I sold the calls in there for 43 cents, and the market obviously rallied. I had that stock put to me short at 29, but I collected the 43 cents, so my break even is now 29.43. Well, I did end up having that stock short. Market continued to rally. I had sold the 29 puts in there because if the market came back down, I would be able to offset that short trade, and that was a 74-cent collection. And then I covered that trade for 16 cents. So I've lowered my overall cost basis by $1. So the break even was right around 30. Well, I covered the trade at 34.43. So it was a loss on that, but we were staying mechanical with it, lowering my overall cost basis, or actually increasing my break even in a sense on this trade. Not quite enough to make up for what the market move was yesterday, but I'm out of that. Nonetheless, it just I pulled the ripcord on it when I was hearing all these Fed governors. And finally, I was going to talk about Tesla here. You can see Tesla's big sell-off earlier today, well over 10% sell-off. You can see the high there at 479, the low was 405. So it was almost a 20% sell-off at one point in time. Starting to make a bit of a move back above that 9-day simple moving average. So people are going to be keeping an eye on that, as that is going to continue to show short-term bullishness in this trade. Settle below that will make it look like it's starting to want to sell off. All right, that's about all I got for you guys. I do need you guys to take a moment to go over our disclaimer, as we are an educational company. I'm not trying to solicit you guys to buy or sell any of these trades that I'm doing, but what I am trying to do is teach you guys how to stay mechanical using options. Follow these guidelines that we're going to talk about tomorrow in the webinar. Go check out protraderstrategies.com. That's all I got for you, other than if you can't take that, take it easy.